Hi everyone, Alex from Summerhill with another quick update. Today we'll cover new security measures we'll be rolling out in March, resulting from our latest IT cybersecurity review. Superannuation contribution caps increasing from 1 July 2026. Comments about our bond investment strategy resulting from our latest investment committee review, and a short market update and how to deal with uncertainty. So, starting off with new security measures, starting in March, we'll be rolling out new security measures to further protect your personal information. We'll be introducing two-factor authentication via SMS when updating your personal and financial information prior to our regular planning meetings. We'll also be implementing two-factor authentication for access to the Summerhill client portal. As part of this enhancement, each client will be issued their own unique login rather than couples sharing a single login. Now, two-factor authentication is a security process that requires users to verify their identity using two separate factors, such as a password and a one-time code sent to their mobile phone. This significantly reduces the risk of unauthorized access, even if login credentials are compromised. So, Margaret will be in touch during March with guidance on the next steps to set up your two factor authentication for the Summerhill portal access. Moving on to superannuation contribution caps. Following the release last week of the latest average wages data for the December 2025 quarter, we can confirm that superannuation contribution caps will increase from 1 July 2026. The ATO is expected to confirm the 2026-27 super rates and thresholds later this month. So key changes are the concessional contribution cap will increase from 30,000 to 32,500. Concessional contributions are pre-tax contributions, which include employer SGC, salary sacrifice, and personal contributions for which you claim a tax deduction. The higher cap provides the opportunity to add more wealth to the superannuation environment in a tax effective manner. Clients with existing salary sacrifice arrangements at 1 July 2026 should review their salary sacrifice agreement to take into account the higher concessional contribution limit. The non-concessional contribution cap will increase from 120,000 per annum to 130,000. So non-concessional contributions are after-tax contributions. Although you don't receive an immediate tax deduction for these contributions, they can be a highly effective way of dramatically building wealth in the tax-effective superannuation environment. And additionally, as mentioned in the February update, the general transfer balance cap, being the amount one can transfer from superannuation accumulation phase into a income stream pension, increases from 2 million to 2.1 million. So these changes can impact strategies for making super contributions and commencing an income stream pension before and after 1 July. We will discuss the caps at your planning meeting and will contact you individually, if relevant, to discuss how these cap changes impact your strategy. Moving on to one of the outcomes from our last semi-annual investment committee, specifically regarding bonds. So, as part of our regular investment governance process, we actively review the portfolios we construct for clients to ensure risks remain appropriate and diversification is maintained. This recent review focused on exposure to the US within global bond portfolios. We undertook this review because of the differences in expected returns across regions have become more pronounced, and we want to ensure portfolios are not overly exposed to areas offering lower long-term return potential or unnecessary risk. The review confirmed that no changes to our asset allocations were required or the underlying funds we use, though it is important to note that the way our bond portfolios are constructed, exposures to the US, particularly US Treasuries, is already deliberately lower than broad market benchmarks, considering low expected returns based on targeted term and credit premiums for US Treasuries. Bond investments are positioned based on long-term expected returns and diversification benefits, which means capital is directed towards regions, sectors, and currencies offering more attractive risk-adjusted outcomes rather than simply following index weights. We actively review these exposures, test whether risks remain appropriate, and only make changes when they add clear value for clients. Where risks are higher or expected returns are less compelling, portfolios are already structured to limit concentration while preserving the defensive roles bonds play in supporting long-term stability. Now, moving on to a market update. This video is already going on for a bit too long, so I'll keep this short. Now, the news of the start of a war between the US and Israel and Iran is obviously devastating for all involved. This could clearly pose several risks and disruption for global economic growth, which in turn could contribute to a correction in global and Australian shares, which were already looking a bit vulnerable to a correction from a valuations perspective. With that said, we do not feel it warrants a change to one's investment strategy. The future is always uncertain. However, the current period of rapid technological innovation with AI combined with heightened geopolitical tensions is making the level of uncertainty feel greater than ever. I've included some articles about the war and potential implications for investors, along with some rules about dealing with uncertainty and geopolitical risks that you all might find useful. The most important action in times like these are to focus on what you can control. Paying more attention to the mainstream media won't change what happens, and frankly, won't provide much help with your investment decisions. Share market falls are normal and they are a part of investing, but trying to time markets by selling out before the fall is a recipe for destroying your long term wealth, given the challenges in accurately timing when to sell and when to buy back in. The key to financial success is to stick to your long term financial strategy and to remain disciplined in the good times and bad. Finally, a quick note that I am taking my mum to Iceland and Scotland tomorrow, being Wednesday, the 4th of March, for her first international trip. While I usually work each day while I'm away, I won't be doing so on this trip as I'd really like to focus on spending time with her. I'll be harder to reach until the 27th of March. Margaret will be available if you need anything during this time, but don't hesitate to reach out by email directly to me if anything urgent pops up. That's it from me today. If you have any queries, please don't hesitate to reach out. Thanks.